wait, hold on. Oh yeah, it's so proud. It's live. Oh my God. Hi, Rachel. Welcome to Venture with Grace.
Thanks so much for having me. I'm excited to be here.
To start off the show, I would love for the audience to kind of know you a little bit more. So you have worked at Bain& Company as a consultant, and then later on, I think one of your biggest like career break is like at Uber, which you started your career as a general manager running the DC area, and then you ended as like the VP of head of new mobility before founding Construct Capital. Maybe we could talk about like what were some core lessons that you've learned early on in your career, kind of shape you into who you are today.
Yeah. Well, first of all, thanks for having me. This is fun. It's always fun to talk about the journey, and hopefully will be interesting and helpful to other people. So, I started my career, as you mentioned, as a consultant. I think for me, I was born and raised in New York. My parents were far from the business world themselves. They were academics, and so really, I was kind of like figuring it out very much for myself. And I was really lucky to get an internship and then a job at Bain in New York, which, again, I went to Amherst, amazing school, liberal arts, but nothing having to do with business. So I was very much, Bain was just an amazing training ground for kind of how to see, a lot of parts of business and get paid to do that. And then, went to business school. I should actually mention, I spent 6 months doing an externship at Bain, which was a cool, program that you got to do there. And so I spent that time working at a place called MLBAM, which was the online new media part of Major League Baseball. And so I wanted to do something in sports. That was very much what drove that opportunity. Figured, when else in my life, I was a college athlete, when else in my life am I going to get to work in sports? But really, it was actually one of the first online streaming platforms that existed. And so it was really this like digital startup that was owned 1/30th by each of the Major League Baseball teams. And it was all about kind of putting operations in a tech company. So actually became very relevant later. Went to business school, went to Stanford, actually spent my summer and then a year working at Clorox after that. Knew I loved the general manager skill set, and it was very clear to me, like, marketing was the one thing I had not touched at all at Bain. And so, used the Clorox experience to frankly get some marketing training. Thank God they, were willing to. The other skills I had, the marketing skills, I definitely didn't when I started there. But quickly realized there that, being able to move up quickly in an organization was important to me. I'm not the most patient person, and definitely didn't have the patience to say, okay, spend 10 years to be able to be a director there or do the next job. But I think one of the things that was advice that I got coming in out of business school, and one of the things I really, the experience at Clorox really drove home for me is, you want to do what a company does to make money. And so those are the functions, when you're thinking about a bigger org, like those are the functions that are really going to be the power centers and are ultimately going to be the ones that are the decision makers. And so, it's very clear, like if you're a brilliant engineer, being at Google is great, right? If you're a great marketer, or in the marketing org, being in a place like Clorox or P&G is where you want to be. If you're a great finance person, like, are you going to have, if you're at Apple, you're not necessarily kind of in the epicenter, right? And so I think that was definitely one of the things that, the key kind of things I learned in terms of the Clorox experience. That marketing role was very much the GM role. And so I had always been fascinated by tech, and I've always was excited about the startup world, but it's actually hard to find tech companies where ops is, or non-technical people actually can drive like the business. And so I think that's one of the things, and we can talk about sort of the post-Uber, kind of mafia. And I think why one of the things that made Uber so special as a startup, particularly for people that didn't have a big, advanced technical degree beforehand, was that the ops teams very much, especially in the early days, were what drove the business. So as you mentioned, joined Uber in the fall of 2011. They had only raised a Series A. In terms of where they were stage wise, there were about 25, 30 people at the company at the time, and joined to start the business in Washington, D.C., which was one of the first markets that Uber launched in. And so, the way the job description was written, and I think this definitely rang true, was, you were kind of CEO of your city. And so it was kind of this like risk-free way almost to be an entrepreneur, to really, each team at the time was like, a little bit on an island, but you had the product and the tech resourcing of the broader Uber org. And it was almost like you were in an accelerator with like everyone else who was doing the same business that you were, and you were all equally incentivized on each other's business. So as soon as you figured something out around how to help a city grow, I would share it with the New York GM, and we'd share it with the San Francisco GM, and it was very collaborative around learning, and because it was this super decentralized organization, particularly at the time. And so anyway, so that was kind of a little bit of the beginning of the journey, and then happy to talk more about the Uber experience and growth, of course, there.
I love what you shared. I think like I was taking notes when you were talking. I know I'm so old school. I am typing notes, and then people are like use note taker all the time. But one thing is like I thought what you said was really cool. Is like you said like you learned the general management skill. So I think that's such a skill that like people lack off in the startup land, because I think the 0 to 1 is like, I don't think it's easy. It's just take one set of like personality. A lot of it's like business development, and then like product management, like slash like trying what works and develop the product. But I think like the general management, because like when you at a certain skill and like you have to like kind of scale up the business, you need someone who like is like operationally lean, and then like making sure that they are like kind of founder minded to like manage the whole company. So I wanted to learn more about like what you thought about like general management, what has that meant for you, and then what were some skill set that you were kind of like developing back then.
Yeah, that's a good question. And I think, one of the things I learned, and I think business school was good at kind of reinforcing this for me, is I was the kind of person who was like pretty good at everything, but like didn't necessarily spike on any one thing, right? So there are people who are like the best finance people, or like the best marketers, or like, the best operations people. And I was kind of one of those people who's like pretty good at a bunch of stuff. And I think that's part of being a GM, right? And I think Bain was great at reinforcing this. Like it was about problem solving, right? You were like, the problem set that you were facing could be so different on any one day. I remember the first time Uber in DC, which is the market that I joined to start originally, was the first real city we had like a big regulatory fight.
Mm-hmm.
And I remember really early in that conversation, we had just had, and I can give you the full backstory, but basically like a vehicle, a driver's vehicle was impounded by the taxi cab commissioner. And it was kind of like a little bit of a press stunt. They called the press to come to the Mayflower Hotel. He took the Uber to the Mayflower Hotel and then had the car impounded, unlike the Friday before a long weekend, which meant it had to sit an extra day in the impound lot. So it was kind of it was a political stunt as much as anything else. And I remember, talking to Travis at the time and saying like, okay, what do we need to do? And he's like, we need to get a lawyer. And there were no lawyers at the time, by the way, at Uber. And kind of a regulatory person. And I was like, okay, like, how do I select one? And he's like, interview them. I was like, what do I ask? I never interviewed a lawyer in my life. Right. And so I think that was a quick, like, just as that example, there wasn't a training ground for like how to, at the time, particularly like how to deal with a city that wants to shut your startup down. Right. There weren't sort of playbooks for so many of the things we encountered. It was really about problem solving. It was really about like, how am I going to solve this, this problem today? And those problems could be policy and comms related, and could be financially related, and they could be operationally related, and they could be tech related. And part of it was figuring out, understanding enough to figure out how you problem solve in a totally different arenas, maybe than the ones that you're like trained in.
Mm-hmm. For sure. I wonder, so like, how do you kind of like figure out this thing? And then the other part is like, um, I think one of the things that you just said earlier was like, you need to pick, like, you need to do what a company does to make money.
Yeah.
Basically getting closer to the revenue. I feel like that's kind of my realization as well. Like, for example, like in Silicon Valley, I feel like being an engineer at most tech company is like the main category of work. And then people kind of like show the respect like a lot higher than if you're doing anything else. But same as like, if you were at like, I don't know, Goldman Sachs, you'd probably be better doing
finance.
stuff. Yeah, exactly. So for that, like, I guess like for a person, if the person is like non-technical in tech or like doing something is not like in the main company function, like what would be your suggestion for them to kind of like stepping into the arena of like maybe not their expertise, but like also like it's a company center?
Yeah, I mean, I think just to be clear, first of all, it's like it doesn't mean that people who are lawyers at Uber isn't important. Actually, in fact,
it's very important. I feel like for Uber.
Yeah, or policy people. Actually, like I've actually talked to a whole bunch of policy people who have left Uber and are kind of like, it's not quite the same because policy was so strategic to what the company was doing to be successful versus what policy might mean in most organizations. But I think what you need to do is figure out, like, I think that the reality is, if you're an ops, kind of an ops person or a GM, and you're and you're going to an AI company today, right? That role is going to look different. You're going to have to figure out how to, you may not be the decision maker on as many things. And I think, again, I don't think it's like it doesn't mean you can't contribute. It doesn't mean you can't have a great experience in a company when you're in a more ancillary function, but your role is different, right? Your role is one of support. It can be one of providing, and a finance person's a great example. Like, you might be providing like all of this really critical data to help somebody make a smart decision. But like, that's different than being a banker at Goldman, to your point, right? And kind of being the epicenter of what the company does. And so I think, like, especially early in your career, like, I think it's a more of an early career particular piece of advice where you probably have the opportunity to kind of rise up faster, to be trained by people who are better, where that is kind of one of the best places you can go for your skill set. It's gonna look a little different than it would at a in an organization, I think, where it's a little less core.
For sure. I wonder, another thing what you said was really interesting was like, you said like, oh, you if you figure something out, you would call the New York GM, SFGM, like, so everybody just kind of like share notes. Like, this may be like a really like nuanced question, but like I think like one of the question I had was like, so for example, how do you deal with like, I think like I think theoretically, obviously everybody share would be great, but also like in different companies, this is not like particularly for you or for Uber. It's more of like for a company that you're in, like you are in a team that like you are sharing the resources, but sometimes like there's conflict of interest. So for example, it's not, I wouldn't say it's a competition, but I would say like, a lot of people are having competitive mindset of like, oh, we want to be the best like region, blah, blah, blah. Right. So how do you think about like, or like, what's your mental framework on like, sharing the best practices or like, even sharing resources within like a company to also stand out among like other.
Yeah, I mean, I think the reality is, so one is, I think Uber gets a reputation, particularly kind of Uber 1.0, of being like ultra competitive, and like there was no infighting. Like, I think what people need to realize, particularly at startups, and I think this is like so true at startups that are growing quickly, like if the company is growing quickly, your trajectory is growing at the rate the company is growing. Forget about what role, bumping up roles. And I used to tell people on my team all the time, like, particularly, I think in today's day and age, like people would say like, oh, I haven't changed roles and like, it's been 12 months or it's been 18 months. And I'm like, but the city that you manage, right, has grown 3x, 5x in that time. Your responsibilities have gotten 3 to 5x larger. That's amazing. Like that is an insane trajectory for like any other, for most other organizations or for most careers. And so I think one of the things that people miss sometimes in all these things is like the best thing you can do for your career, particularly if you join a startup, is to join the right startup. It actually doesn't matter as much that your role moves in that startup or anything like that. Like your and forget about even the financial, like just implications, but just from the implications of like your own career management, like the best thing you can do is join a great startup and hang on and watch that startup go up. And so I think one of the things that was so special at Uber is like we were all part of this like incredible rocket ship. And frankly, we're much more concerned about like what was happening to the whole. And particularly in the early days, because the growth was so incredible and dramatic. And of course, now AI companies are doing this much more frequently, but the growth of tech in the real world was like truly unprecedented when we were at Uber. And I think that, I think we kind of all like inherently were very aware of that. And we're just excited to kind of be on board. And then, we had teams that were kind of best practice sharing teams. And there was like a pride that you took in building something that was good enough to be used by others. And so those kind of informal, that kind of informal sharing, and then it became a little bit more formalized, was very much a point of pride for us. It wasn't, you wanted to build it first, right? Or build it better or improve upon what other people had built, because that was how, like, the beauty of decentralized teams is speed, right? There are other problems, to be clear, that come from decentralizing teams. But the beauty of kind of the way Uber was built in the old days, these very decentralized ops teams, where almost you had these like A/B tests running constantly in different cities. And so those only matter if the best things are shared.
I have a question for you on this. So, I feel like you mentioned about like it's a decentralized team and then like people are running A/B tests. Like, how frequently do you guys communicate? And then like, do you feel like people are incentivized? Like, what are people incentivized by besides like money? Because I think if you are joining Uber at an early stage, you probably don't. It's not like the money that like kind of is like exciting. It's the most exciting part basically. So I guess like, what do you feel like incentivized people? And then, what is the infrastructure for like when people are sharing these like information across like city, and like what's a cadence? Like is that like a Monday morning 9 a.m. to like 11, and then like everybody like go through a presentation, or
Well,
what's the vibe?
I think like just whenever you're thinking about org structure, and we'll talk to startups at Construct about this all the time. Like people will say like, what's the best org structure? And it's like, there's no one like ideal org structure, right? You've got to think about like strategy, then structure, then people, right? And so Uber's strategy was about speed. Like there were network effects in the ride sharing business and speed mattered. And so our ability to win globally, as I think at this point Uber has, was very much dictated by our ability to get in and get large in cities as quickly as possible. And so that works better. That is easier to do when you have a decentralized organization. And GMs were deeply empowered to help do what it took to drive the success of a given, in a given city or of a given organization and of a given market. And so, we had a pro team, PR, like that's what they were called, the pro team. And they were very much kind of responsible for helping to do the things that needed to be centralized across teams and helping to disseminate best practices. Because like, and you were asking, like the US teams were, talking a lot and the Europe teams were talking a lot. And then there'd be some talk between the US teams and the Europe teams, just to use that as an example, a little bit harder because of time zone changes, a little bit easier for the US teams and the LATAM teams to talk, just to use examples. And so, that was very much, so there was, the pro team was kind of the more formal piece, but we did an all hands every week. And I think it was up until we had about 35 to 40 markets. Every single all hands, the GM would share the results and the dashboards of the metrics in their city. And, Travis would dig in front of the whole company around, hey, why was your completed to request ratio? Why was the completed to request? That's like a common Uber, metric, right? Which is basically how many people requested a ride and how many rides were completed, which is a sign of like the city market health, right? And so if that was like 70%, he would say like, what's going on? Why haven't you added enough drivers? Why isn't supply high enough? What was, why were there spikes in demand? Why couldn't you fulfill it? Why weren't you better prepared? And so there was a deep sense also of metric visibility, which is really important when you're decentralizing, and accountability across. You were responsible for knowing your metrics. You were responsible for why, for being able to explain literally to the entire company. And by the time we got to 38 markets, by the time you got to 38 markets, I think it was like pretty boring for the engineers, because you're like, do we really need to hear like a detailed explanation of like why Minneapolis didn't perform last week? But it was really all about accountability. And then the other thing was just the visibility of data. The whole organization had tremendous amount of data visibility. And so that inherently created accountability. And so, yes, we were decentralized, but like you still had a tremendous amount of accountability and responsibility that kind of came with that.
Do you feel like this would only work in like a paid company, or do you feel like any organization, let's say like volunteering based organization, can also pull this off? Because I think like if everybody's like I know that people are not incentivized by money, but like but they're there to earn like a salary, right? So like they have to like kind of show like, oh, here's our metrics. But if you are kind of like, do you think this can work for people who are like non-paid, basically?
I think it completely depends on what is the strategy of the org, right? So I'll give you an example of like the where this backfires, right? So an example is when things need to be really consistent, like that was not Uber's strength at the time, right? So like take an example of like compliance, right? You don't need to innovate on compliance, right? You just need to like do it right every time, right? If compliance is like a very core piece of an organization, nonprofit, for-profit, whatever it is, like that speaks to more centralization, right? Because like you need one team of experts to like deeply be responsible for making sure something is accurate. And so I think it's really hard to say, like there are trade-offs that come with every structure depending on like what you're optimizing for. I think Uber was optimizing for speed. I think they, the descent at the beginning, and then over time we became more and more centralized as what mattered to the strategy changed, right? Over time, being, more efficient, being, not having duplication matters more, not having, fewer mistakes, fewer errors. The stakes around making a mistake are higher when you get bigger. Like that speaks to more centralization. And over time, Uber moved in that direction rightly.
I wonder, so like, I guess like another question I had was, when you are, maybe we could start talking about like construct, because I feel like I know the time is like literally almost half, but like I find it so fascinating because I think Uber is such a really fast growing organization, and I think a lot of people could learn from it. And then when you mentioned the lawyer, I actually, beside like Kevin from Rockhouse, and then like actually Bradley Task should be
Mhm.
like Uber's like first lawyer. He was on our pod too. That was like
Uh,
I was thinking about the
More
Uber
on the
community.
policy side, not on the legal side, but yes,
Yeah,
external. Yeah,
there were so many. I feel like
totally. Yeah, worked with Bradley closely and
yeah,
Kevin.
yeah, very I guess like quote unquote like Gen Z word cracked people on the team. Maybe we could talk about like the construct capital that you have built. Maybe talk to us about like, you know, the first fund. I think the first fund was like 130 or 140 million. You were trying to raise 100 million, but you over raised like 40%. And now like the most recent one was like 300 million. Maybe we could talk about even like, I mean, I didn't really want to bring up the women piece because of I feel like it's kind of like underselling you as like, you know, I don't want to just compare to women, but like it's like literally I think across gender, like this is a really big race for people's like first like three funds. And maybe we could talk about like, you know, your journey on like fundraising from being an operator
Right.
at Uber to like raising your own fund. And then this is only 5 years. Within 5 years, you already built up this kind of infrastructure for like three funds, which is like very impressive.
Well, thank you. Actually, today we will activate our third fund, so a momentous day as well. But you know, I think when we went out to fundraise, or let me even back up. Like I think both Dana Grayson, who's my co-founder at Construct, and I had spent quite a bit of time in and around the spaces that we were excited about investing in. Dana was a partner at NEA for 8 years before we started Construct. She invested in a whole bunch of like really successful companies at NEA, and I think, you know, for us, I think first and foremost, like we both had sort of track records of success. Mine wasn't like a venture track record; it was an operating track record. Dana had the venture track record, and so I think, you know, it was our first fund, but we were like, we weren't first timers at kind of like coming into the business world. Dana was definitely not a first timer at, you know, being part of fundraising in the venture world as well. So I think we definitely benefited from deep experience that we had before. And our whole funds thesis is really around this concept of foundational industries, as we describe them, areas like supply chain and manufacturing, logistics, mobility, certainly as well. And these are areas that are like deeply underinvested in from a technology perspective. If you look at what that has meant for the US from a productivity standpoint, what we have seen is that the sectors that have invested a lot in technology have grown, 28%, I think is the numbers in the last, just since 2015. And these sectors have declined. And largely, if you look at why, you can see the technology uses are very, very different. And so our whole thesis was really around like when you can bring technology into these areas, they are massive markets with huge TAMs and very little incumbent competition. And so, and we've actually taken a look at how that thesis already has played out in the public markets. And if you look at, what we have described as tech first industrials and compare them actually even to the best tech companies, they're at parity with the Mag 7 over the last 2 years in terms of revenue and stock price performance. Like you can't find a sector which has performed as well. And and we would say the reason is these tech first industrials have done so well is because massive markets, low tech incumbents, very low competition in general. And so when we went into the fund's thesis, we were probably like a hair early, which is kind of where you want to be on the venture side around this thesis. And so there was a little bit of education, admittedly, on the beginning of Fund One. We started fundraising 5 weeks before COVID started in 2020. So it was also a really interesting time to, LPs had never at the time invested in people they hadn't met in person. And so here we were, a first time partnership, first time fund, and trying to kind of get through that, that barrier that all LPs were having around like how to think about the market and capital deployment in 2020. So we were very fortunate to we kind of did a first close in July, and then as the markets kind of opened up a little bit more between July and the end of the year of 2020, we're able, as you mentioned, to surpass our target raise. Actually, we raised our hard cap as well to 140, but very clearly like wanted to constrain it there. So we have a big belief that concentrated portfolios enable not just driving the best returns, but enable us to support founders in the best ways possible. And so we didn't want to have, a large spray and pray portfolio, to kind of use the venture term. It really was about getting, being able to partner deeply with entrepreneurs, in particular in these sectors. And I think what entrepreneurs realized quickly is, who we're trying to build in these sectors, that experience in these areas really mattered. Right. When I joined Uber in 2011, everyone told me I was crazy to go join a taxi company. Their words, not mine, because transportation is slow moving and heavily regulated and high capex, and you're never going to get a venture breakout in a sector like that. We heard a lot of those same echoes at the beginning of 2020. And then I think as there became just more visibility through COVID, through in some ways also through kind of government policies and other things, but really just through visibility and some really strong entrepreneurs starting companies in these spaces, I think it really kind of awoken, more people to the opportunity that we were excited about. And I think, we've seen, we just looked at the data since 2020 to today, there's been a 20x increase in Series B and beyond capital that have gone into these spaces, which is great for our companies because we're early stage investors. We're investing at the seed and A. And I think one of the early potential knocks people had on Construct was who's going to do the next rounds? Who's going to do the next rounds? And I think, now these spaces kind of are very in vogue, and a number of larger funds have people dedicated to them. There's other funds now that are more and more focused on these areas, which, we view as a good thing for the ecosystem.
For sure. I feel like it's such a popular sector nowadays to invest in the quote unquote traditional unsexy company. And I wonder, so maybe we could talk about the portfolio construction, since you mentioned it's a concentrated portfolio approach. And, also I wanted to talk about the partnership between you and Dana. So, because I think for every, a lot of the experience we see, because of they spend a lot of time just being a career VC. So they didn't have much of an operating experience. So people want to partner with a great operator like yourself. How do they kind of find you? Or I know that you guys met at NEA, but I guess from the broad, I guess just on a broader level, how do you ever find a partner to build enough trust to be okay, let's go on raise the capital? Because I think it's just a lot.
Totally. I mean, it's one of the most important, whether it's it's a co-founder relationship, right? It is the person you need to trust deeply. You need to trust their judgment. You need to trust that they'll do that you guys are aligned around what you want to build. I actually think in the case, particularly that Dana and I felt, that we were, in our case, it we were in the same phase of life. We both really wanted to build something that was great and wanted to build something for the next 20 years together. And so, when we, we spent a lot of time before we even started Construct together. I was a scout at NEA, so we'd done a little bit of work, but we hadn't worked together formally. And I think particularly from some LPs' perspectives, they view that as a knock, right? Does this mean there's breakup risk, right? Because obviously if you're an LP, you're trying to minimize beta, right? And so that was one thing that I think we had to get over in the first one. But the beauty of not having overlapping careers and not having had totally overlapping skill sets is we are set up differently and I think better to help founders, right? And Dana knows, venture inside out. Like, I have learned so much from her around how do you lead? Like, what does leading a deal really mean? What does winning a deal really mean? Very different than angel investing, right? Very different than just kind of like following top firms, but like, how do you show your value through a diligence process? What is running an institutional grade firm mean? And I think, we've done a very good job of doing the, those things that help train our team, help provide confidence to LPs that we are assessing risk appropriately, but also, I think the in particular the operator experience, like, founders really appreciate, right? And so one of the decisions Dana and I made early on, that's like a good example of a decision like you can't go back on, is, there is no attribution at Construct. And so what does that mean? That seems really inside baseball, perhaps, to like a non-VC person, but actually dictates so many different kinds of incentives. So that means there isn't deals that are, oh, that's Dana's deal, oh, that's Rachel's deal, oh, that's, Eugene's deal, right? Of course, there's like a project manager on a team and a point person for CEOs, because otherwise, like, nothing, would exist. But no one is more incentivized to help some companies than they are to help others in our portfolio. And so that means we're able to bring an extremely team-based approach to helping the companies that we think are going to be the most, that are going to generate the most returns for our LPs, right? That's ultimately the business we're in. And so part of that, and I think it's why Dana and I, the complementary skill sets that Dana and I have, she has spent, prior to Construct, had spent 12 years, 13 years, 14 years prior to Construct in VC. I won't totally, you can add 5 to that. But, and I had spent sort of this intense decade, on the operating side. And so, that combination, I think, is really powerful. But I don't know that you could, I think it'd be very hard to build a firm without somebody who's had institutionalized VC experience. And I think it would be very hard to support founders as effectively without someone who's had operating experience. And so even in the teams and the people we hire on our team, we very much like that combo of experiences as well, as we think about sort of rounding out the full skill set of the Construct team.
I wonder, so like maybe we could talk about like one is like the incentivized for everybody to like equally contribute. I know it's like by design. I think like last week I chatted with like John from like True Venture. He started True, and then like I think their partnership is like very equal. But I think the I wouldn't say downside, but like I think the contrarian view is like I think in venture a lot of people like lifetime goal is to get on the Midas list and like being that guy who like invest in Uber. So like how do you think about like incentivizing people to like contribute and like not being the project manager of this deal, but like also I guess like if you are not the project manager or like the lead investor on this deal, like you can still like being prompt to like help with other stuff.
I mean, I think the corollary, and this would be the Uber corollary too, is that the team here has carry.
Mm-hmm.
Like that's not, and that doesn't in many firms, mm-hmm. until you get to a certain level of seniority, you wouldn't have carry in the funds, right? And so just like a startup, right? At a startup, everyone was incentivized to contribute to the success of the company because they're incentivized to do so. Like we very much view it the same way. Like any long-term role has carry at Construct, including like, our office manager and admin. Like that's part, and I don't think that exists at most places. And like we want everyone to be incentivized. And then of course, like we have workload spreadsheets. Like we are a small enough team that we are watching very carefully. Like, we're not into free riders here either. Like, if you aren't contributing, like, you won't be here for the long term. And we'd like to keep a small team. We want to make sure, we run construct like a startup. And I think you see the difference when you work with VCs that also like are fundraising, are also kind of like doing all the things in terms of how they support companies as well, because they're not like, I think there are easier ways to do VC than starting your own firm.
For sure. Well, I wonder, when you are thinking about, I guess, like portfolio construction, since you guys are like doing like a high concentration approach, maybe we could talk about like, how many deals do you invest in each fund, and then like what's a general strategy you lead, follow, or like combination, and why?
Yeah. So we tend to lead or co-lead deals. We are, from a portfolio construction perspective, we have about 25 companies in each fund, give or take a little bit. We do about 2/3 of our initial investing at the seed, 1/3 at the A. And that having both, I think, enables a couple of things. One is just a little bit of time diversification, right, that you get within a fund, which you want to do. Two, I think, is the ability to come back to a deal that you may have passed on at the seed, because for one of a variety of reasons. But if, for us, if we kind of haven't started to see the early signs of product market fit, or if the technology hasn't been quite built out, like that enables us to have kind of another bite at the apple in a deal we really like. And we've done that a couple of times and gone back and invested later in deals we've passed on at the seed. And I think, but the concentrated portfolio fundamentally, I mean, you also asked about a little bit about, what the incentive structures are. Like, we know what everyone is doing for each of these companies, because we don't have that many. And, we do a portfolio review process every quarter where we go and tick through company by company. What do we think the core difference maker is going to be for that company over the next quarter? And each person has to go through and indicate what we think is going to make the difference. Sometimes, honestly, it's like just support the company as they build product, right? There's not a lot we can do. But sometimes it's, help introduce them to new investors. It's a key hire. It's a key customer introduction, right? Those are the things we're thinking about. And so then at the end of the quarter, we go back and we said, did we do them? Right? And so, again, I think there's a lot of ways to like create accountability. And frankly, I think that's a little bit of the operator part coming through, right? When we only talked about sort of the beginning of Uber, but I started as the GC GM and then ran the whole US and Canada business, which was $20 billion or so in gross bookings when I stopped running it, and then ran the whole new mobility business. But when you've got 30 cities running or 30 regions running in a market, like, you also need to create accountability and create the systems and processes to make sure that each GM or each city is doing it. And it's very much the same thing, in venture. And I think Dana brought some like awesome best practices from NEA. Like, I was able to bring some best practices from Uber, and then we've evolved them like into how we want the construct way to work as well.
I wonder, from the I guess like one thing is from the fundraising perspective, do you feel like you have a system for that too? Because you guys obviously are very amazing at fundraising. And how do you think about the approach? Is that like, you go for the LP intro and then I go for the pitch, and then like, how do you kind of pull out?
It's less sort of like systematized like that. I think we've done so first and foremost, like, we did a good job in our first fundraise of having a very institutionalized LP base. And so that means these are LPs that are used to coming back, multiple fund cycles with an investor. And that's a little different than, for example, like if you were doing doing a lot of like friends and family, right? Friends and family may be more and that's obviously a colloquial term, but like, individuals that are investing, much smaller amounts are much more used to probably startup investing, right? Where like you invest once and then you watch what happens. From a venture perspective, ideally what you want is the vast majority of your capital base to come back fund after fund after fund. Mm-hmm. So and we've been very fortunate to have our fund, I think virtually every single fund one LP is still an LP with us in fund 3. And so the vast majority of the capital base has come back and actually in many cases expanded, right, in terms of the total dollar value. So when we're talking about raising a new fund, we're only adding like 3 or 4 new LPs a cycle, which makes it a much easier process. And then frankly, like it's like any sales process, right? This is like us, us doing sales. This is saying, okay, how many prospects should we have? How many first meetings should we have? How many do we think are going to move through the funnel? And for us, we really wanted to keep the fund size constrained. And so we actually put both our target and our hard cap as 300 for this fund, which was a little scary to do. Most of the time, like you can kind of hedge, oh, the target is this and the hard cap is this. So if you can make the target, mm-hmm. and maybe if you don't make the hard cap, it still seems you can still declare victory, right? Because you've beaten your target. We decided to put them as the same amount, which for us was very much saying, okay, what is the right strategy? What is the right fund size for our strategy? And like, let's have some conviction in what the right fund size for our strategy is and go out with a single number. But that also means, and fortunately we were lucky to have ended up there for fund 3, is, we had to turn away capital because, we very clearly said, like, we're keeping it at 300. We think 300 is the right number for our team size, for our fund strategy to drive the best returns. And so we're not going to keep increasing. And I think, we believe kind of that 250 to 350 is where we want to stay. Like we do not anticipate expanding beyond that, perhaps ever. And I think, I think discipline is important. And I think, otherwise you have to continue to scale the team. You have to continue to scale the partners. You have to continue to, you can't support entrepreneurs in the same way. And we think one of the beauties of the way Construct is organized and designed from a fund structure perspective is, a $3 or $5 million check like really matters to us and can drive differential outcome. And I think it's very hard today for some of these multi-billion-dollar, multi-stage funds to say that with a straight face.
For sure. I wonder, so like one of the other things I found really interesting was like you mentioned about like showing value in the diligence process and the building like an institutionalized great firm. What do you think kind of like struck you as like the difference between like being an angel to like institutionalized great firm? And how do you kind of like show value in the diligence process? It's not just like maybe I intro you to like, let's like vet your startup idea with this design partner from Google, or like, what's a...
Yeah, I mean, I think some of it is, I think it's important that you don't outsource the diligence process. You may make customer intros during the diligence process. You may listen in to those potential customer intros. You may listen in to those potential customer intros. Mm-hmm. But you're not investing based on whether the customer says, I think this is a good investment, right? I think that's all about investor judgment and honing kind of having, honing your investor judgment. I think but using customer intros as an example, like really understanding like why does the customer like it? Why do they think they're going to use it? How will that change over time as technology changes? How will that change over time as in terms of where you think that market or industry is going? And, one of the examples there's one company I'm thinking of in particular a couple of years ago that we were diligencing, and the customer intros were the customer feedback was all great, but every customer liked the product for different reasons. and had a totally different use case.
Mm-hmm.
And it became very clear, like as the company scaled and was going to continue building, like they were going to be pulled by their design partners, and these were design partners, in like very different directions.
Mm-hmm.
And at some level, like early on, these design partners, it was like they were almost an outsourced dev shop
Mm-hmm.
for each of the design partners, rather than having a set of software, right? And I think that's like one of the, just to use that as an example, like one of the really important things you can uncover and customer intros is just one example, but really trying to understand like who in your network can help answer the very specific questions you have about where an industry is going, where a technology is going, but you're not saying, do you like this company? Right? That's like a very different question. It's part of the diligence process. And I think being able to pull, like a good investor is pulling all sorts of data points together around the founder, around the team, around the technology, around the market, around the product, and trying to fast forward in as many ways as you can to say, okay, what is this going to look like in 2 years, 5 years, 10 years?
Mm-hmm.
And is that view of the future one that I think will ultimately generate, a game-changing company?
For sure. I wonder maybe like so I want to be mindful of the time. Maybe we do one real question and then one if fire on. I guess like in terms of like sourcing, winning, diligencing, and win like and then like eventually thinking about potentially exiting. Maybe we could use like any of your portfolio company to like walk through their journey and like how do you meet them and then to like basically diligence them to like think about winning and potentially exiting.
Yeah. So I think, for us, obviously each different companies come in, right, in different ways. But I think one of the things that makes Construct different from other venture funds, right, is we're thesis focused. We're focused on specific sectors. And
Mhm.
so we're constantly building what we call points of view, right? But points of view in various areas to say, okay, here's an interesting area. Like, let me spin up a quick point of view on what's happening in a certain sector, in a certain space, and and continue to use that. Our point of view is probably a good one. That's the overall fund's point of view. That's on the upper left there. But that's kind of the bigger vision around like what is happening in foundational industries, and then of course we layer that down into like more about what's happening in construction, and manufacturing, more of what's happening in production, more of what's happening. We've got an AI one, on the website certainly as well. But I think for us, and physical AI and kind of what that means. But I think having a point of view coming in. So that means companies can come in through our, kind of come into our orbit through a bunch of different ways. It can come from us seeking out those companies because we know they're in a, because we've done a market map. We know they're in a space we're interested in. They're in a sector we're interested in. And, being able to say, we need to get to this founder because we've heard they're doing something really interesting in this space. Sometimes it means
On our 100 list, by the way, I think.
What was that?
Yeah, sorry. They're on our like 100 early stage company list.
Oh,
So
ready on this?
we did a ranking, and then actually I think at least like maybe so since like we launched the list in like September, a lot of the companies on our list were like raised to the next round already.
Yeah.
But yeah. Okay, so sorry.
No, not at all. No, and I think so. Then for us, part of having the point of view is already starting the diligence process, right? It's already saying some of those things I mentioned. How is the market going to evolve? What makes a space investable, right? And again, investable is different than like interesting. And so for us, really having that point of view coming in is really important. When we meeting a founder, spending his, and I think one of the beauties right now of like AI is you can automate a lot of things around, everything except for like really spending time with the company, spending time with the founder, really making sure there's a, the founder sees how you can help evolve their company. And it's not just at one stage. And I think that's something different that Construct does than a number of other funds. We're not, yes, we're stage specific, but we're not about just getting you to the next round. We ultimately want to be about full life cycle help. And I think, early on, that might mean hiring help. That might mean customer intros, but then as a company evolves, those needs change, right? It might be, it might be M&A help at some point. It might be other, help at other points, kind of in the journey and life cycle of a company. And so we really kind of position ourselves as a firm that can help for the full life cycle. And I think the fact that Dana's seen companies from the, from the seed to IPO is part of that. The fact that I've was at Uber from the Series A through the IPO is part of that. And I think, but you need investors that have seen the full life cycle. And we think that full life cycle in these sectors makes a big difference. And I think it's hard to find another firm that has, that kind of has as much experience, has had as much experience kind of in these spaces as Dana and I and the Construct team have.
For sure. I want to be mindful of time, so maybe we'll do a quick fire round for you. What's your favorite book?
Oh my gosh, that's a hard one. Right now, most of the books I read, admittedly, are books that I have to read, that I get to read, not have to read, get to read to my kids. But American Kingpin, one of my favorite books.
I'm writing this down because I have a 2-year-old. So yeah.
Well, this is not the book for the 2-year-old. This is the book for the rest of us.
The rest of us.
Exactly. This is the Ross Ulbricht, Nick Bilton book. So it's a great book.
Oh my God. Who would you invite to your dinner party?
Serena Williams.
Amazing guys. Okay, so who made the biggest impact in your career?
Travis.
Where can we find you outside work?
With my family as much as possible. And I still try to hit the tennis courts.
Love that. Oh my God. You're so good at this fire round. Typically people take like 5 minutes on the fire round, but you're like 30 seconds.
Done. All right, let's go. Exactly.
Love that. Wait, also shout out to Sharia for like commenting. So Rachel, thank you so much for coming on the pod today. It was such a fun conversation. It's like a masterclass for operation and building a fund. Thank you so much for having me. Really appreciate it. Let me quickly answer.